I think basically you have Bitcoin correlation to the dollar, and then you have a lot of the other cryptos that trade off of Bitcoin and by default the dollar as well, right? So we see generally whichever direction Bitcoin's going, the rest of the crypto market is going to kind of go in that direction to some extent, maybe a little bit of a percentage difference. But yeah, I mean, it wouldn't shock me if we see a short-term relief rally in Bitcoin, maybe back towards that 25,000 level. I am kind of midterm still, unfortunately, a little bearish, mainly because I do worry that the economy weakening, think about this, the last 20 years, it has, every time we've slipped into a recession, the Fed lowers interest rates and prints money and prints a ton of money. Well, inflation doesn't enable them to do that as much. And I don't think the markets fully gather that yet. And so I do worry that if we do slip into a recession, what's the card the Fed plays here? They can't just print us out of it because inflation is going to remain relatively elevated. Now, inflation is coming down, but it's not going back to 2%, which is going to make it hard for them to kind of stimulate. So I worry that we'll have an asset sell-off either later this year or in 2023. And just by default, we know that a risk asset selling off like stocks will trigger a Bitcoin kind of flush out. Now, I do think that's the final flush out where we look to start to accumulate on a longer term for Bitcoin. Kind of focused in on the Federal Reserve and the tightening and all this, and we've seen the dollar start to surge back up. But you actually have this beautiful double top right here. And a lot of people think it's going to just rip higher. I'm not a believer in that. I actually think we're going to start to see a pullback and a move lower in the dollar. And if we go to a larger time frame, if I zoom out, you can see two trend lines, right? So this trend line, it kisses right here. It kind of gets close here, but then it tags and pierces here. And then look at that one, how it intersects there. And then this little pivot low going back to 2001. I think that's the most amazing thing. And by the way, in the courses I teach about drawing proper trend lines, right? How do you know this is the right trend line to draw? And we go over that. But finding a pivot point here, going back to 2000 or 2001, I mean, that is so powerful to find that level and understand you should have resistance here. So I'm in the camp that I think the dollar is actually going to start to weaken in the second half or in the last couple quarters of the year into 2023. And that's going to coincide with this kind of counter thought process where the Fed is actually going to have to pull back on their rate hikes. And actually, as we see the economy unfortunately slipping more into recession, they're going to basically have to stop. And this is going to be a tricky thing for the economy to get through, but I think it's going to be a creator of a weaker dollar. Kind of the dream that a lot of crypto Bitcoin players have, and not everyone, but a lot of them, is that Bitcoin will become the digital gold. And what that means is that as we see inflation kind of rear its ugly head, it becomes a safe haven versus something that sells off when the panic hits. And so you kind of want to see that maturity start to take hold in Bitcoin over the next 5-10 years and become that place where people can go for safety versus right now what it is it's a very risky asset to invest in. So remember that Bitcoin is traded in terms of dollars and gold is traded in terms of dollars. So generally, when the dollar goes up, those assets have to decline to keep their value, to keep their standard value. And that's why we see, for instance, when the dollar's higher, Bitcoin sells off, gold sells off. And then when the dollar falls, Bitcoin oftentimes gets a bid and gold will get a bid and metals will get a bid in general. So there's this kind of inverse relationship because commodities, and in all fairness, we're hearing from the SEC that Bitcoin is kind of now a commodity. It's traded in terms of dollars.
Yeah. What do you feel like the United States government is going to do in regards to cryptocurrency as a whole, Bitcoin and then everything else?
Yeah, so I think number one, there's going to be regulation, right? And I think there's going to, when something's labeled as security, there's going to be strict regulation about how it has to be managed, how it has to run. And so I think that that's something that a lot of people are very nervous about. I'm kind of on the opposing side in that, and maybe this is again being contrarian, but I actually think that this is going to be, whenever we get this, it's going to create a panic sell-off. And then I think it's going to be the start of the bottom and the next bull run. And the reason I say that is because if there's one thing I've learned in the stock market of trading for 20 years is that what the market craves most is truth and knowing what's going on and knowing facts. It hates this kind of unknown of like, how is it going to be? Is it going to be this? Is it going to be that? And think about it like this. There's a lot of institutions that want to invest in crypto, but there's too many unknowns. They don't know the rules. They don't know the regulations. And so they're just sitting on the sidelines. So if you get clarity, then I actually think that could be good. Now, granted, initially, you might see changes in how Ethereum is managed and how some other things are done. But ultimately, when the dust settles, I really think it's going to be a positive, and it's going to open the door to so much potential investment. And that's kind of what, I mean, in my dream scenario, if I could draw it up on a board, I'd say, okay, have this stuff come out. Everything kind of takes a dump. Maybe we see that 12, 13,000 on Bitcoin, maybe 600s on Ethereum. And then I just start accumulating. Now, in the series, in the Winning Trader series, one of the things we talked about earlier too, don't just be like, oh, we're seeing the dump, so I'm going to throw all my money in right here, right now. Dollar cost average. Set yourself up. What I talk about a lot in the course is thinking about how much you want to invest ahead of time. So you don't just want to do it on the fly because emotion comes in and you're like, oh, you get greedy and you're like, I'm going to make so much money. So you throw all your money in the trade. And what happens when it goes against you? What if Ethereum goes to 300? Well, you do all your money, you're down 50+% at that point. That's a lot to handle. The emotions are going to bubble up, which is the emotional control aspect. And you might do something that you shouldn't do. Right? So what you want to do, think about the amount you want to invest initially, and then start picking target points. Like if for me, let's say 650, I'm going to divide all my money into 6 parts. At 650 on Ethereum, I buy 1/6, 550, 1/6, 450, 1/6, basically standardize it out ahead of time. So you're just like a robot. Think about an algorithm. Algorithms are just, they know what they're going to do at every point. You need to become that. You don't want to be an emotional investor. You need to be kind of a robot.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.